Okay, let's talk recent market activity. The stock market's down. The S&P 500 is well below its 200-day moving average. The question is how did we get here? So, a long time ago, the Federal Reserve, along with the federal government, decided to do these stimulus packages, and the stimulus packages created a lot of money that wasn't in circulation before. That amount of money was chasing a finite amount of goods and services, which brought inflation. Now that inflation is here, the Federal Reserve really has to deal with inflation, because inflation is one of those things that hurts the lower economic classes the most. It does nothing for really the folks that are on the top because they own assets. And then when inflation kicks in, they chase the same amount of assets out there, and those asset prices get a lot higher. As you look out, and you can see real estate is really high right now as far as value. So the Federal Reserve has to deal with inflation, and they're going to do that by curtailing their bond buying program. Now, what they've been doing for as long as I can remember, definitely for the last several years, they've been buying bonds. The Federal Reserve has, in a way to artificially keep the interest rate low. When you end up doing that, bonds are a less attractive asset, and the equities, as far as stocks, is a much more better asset. The yield is much higher, and they generate more income, so they're more attractive, which causes their price to go up. With them stopping the bond buying program, another word, also called quantitative easing, it causes the bond prices will rise naturally because you don't have the Federal Reserve buying them. And those assets, bonds, will look more attractive to people because they will generate more income, their yield will be higher. So people will go and move money out of equities, as far as stocks, and start buying bonds. So hence, the stock market has fallen. This is something that was super duper predictable, and I don't see how any of those big time fund managers got caught on the wrong side of this, because it is a softball that it's like somebody tossed you a softball. It's so easy to hit. You saw it coming the entire time. So, how do I intend to profit off of this? Well, what I'm going to do, and what I have done, is I have stored some cash to be ready to buy equities when they crash. And so now that we are firmly in correction territory, I've started buying equities again. How far will they fall? It's anyone's guess, because the Federal Reserve cannot prop up the stock market this time by lowering interest rates. It just can't do it, because inflation is an entity that hurts the lower economic classes the most. I mean, they suffer greatly because they do not have the assets to the assets that will increase in value in an inflationary environment. And so all they can do is deal with the inflation, which is the most pressing problem, because the masses are affected by the inflation, not the fortunate few and stuff. And so equities, stocks could fall a decent amount. Will they go into bear market territory? I don't think so. Simply because um, the economy in itself will still grow, in my opinion. Just looking at what I've been seeing as far as um, quarterly reports from all the major corporations, revenues are for most of them. They're meeting their revenue goals. Um, they're meeting their earnings per share goals. And so it looks like to me, overall, the economy is still healthy and things. And so what I'm going to do is put my um, dry powder, my cash, to work by buying equities, um, certain equities, while they are in the correction territory. Um, I'm guessing because of the health of what I see as far as the health of the economy, I do not think we will hit a bear market territory, because with something like that, you'll be looking for negative um, gross national product growth. And from what I'm seeing in the data that I've looked at, I don't see that happening. So anyway, this hopefully this was educational um, and informative, and hopefully it sparks your curiosity to learn more about the economy and how it works.